Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 8th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman for the CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we're talking about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Like I've mentioned, not a whole lot of economic data this week, but we did get crude oil inventories, and they came in at a record, or the second highest, I should say anyway, 13.8 million barrels build. That is a huge inventory number. It was expected to be a build of 2.7 million barrels, but this is the second largest reading in history. So that was just a massive build. But if we're looking down here at crude oil, you can see we have done nothing but just scream higher since that release from the Department of Energy. API came out last night, and they also said that there was going to be a build. I think theirs was closer to 14 million barrels. Don't really look at the API because it is a voluntary survey in a sense, but they have to report to the DOE, which is the Department of Energy. That is mandated. So they came out, reported 13.83 million barrel build. Cushing was a build of 1.14 million barrels, was expected to be a drawdown of 500,000. Gasoline came in as a bit of a drawdown, 869,000 barrels versus the expected build of 1.5 million barrels. There's also record production going on right now, so that drawdown was a little bit of a shocker, I guess, if you will. And then distillates also was not as much of a build as was expected. It was a 29,000 barrel build versus the expected 500,000 barrel build. All said and done, like I said, we've got huge production going on. We've got rig counts at historical highs. We've got everybody just producing. With the oil up here in the 50s, we can produce our shale oil much more efficiently, or at least the margins don't hurt these oil refiners nearly as much. So anything above about $40, they can start really producing in those Balkan oil fields here in the United States. So all of these guys are really pumping out the oil right now, and that's showing up in these DOE numbers. Why is crude oil jamming higher right off the number? This is exactly when the number came out, 10:30 Eastern, 8:30 Mountain Time. So the market saw that. The fear is, well, one thing is that the algos knew everybody was going to start shorting it and started jamming it against each other, which causes that capitulation on the move higher from the retail investor or the retail trader. The other thing is there's some fear that we might start seeing real production cuts if this continues to go on. Like last month we had another big build unexpectedly. Now we have this massive build, 5 times more than what was expected, causing the fear to be that there is going to be a production cut. So that's why crude oil is flying higher right now, despite the fact that there is a glut of oil out there. Gold, we talked about this several times. I said that target line in the sand was the 200-day moving average. As soon as we get above that, we're going to start seeing the bulls take control of that market. We have seen that 2 days in a row. Yesterday, it looked like it might try to go back below there. The bulls defended that area. Now we are pushing higher, up $6 in gold and clearing away from that 200-day moving average. Now, the caveat here is going to be when the 9-day and, more importantly, the 50-day moving average crosses over that 200-day moving average, and we get that cross. That is an indication of a bull market, just like we saw here, and you continue to see the bull market. Inversely, when you see the crossover, that's when you start seeing more of the bearish tone going on, which is what we saw here. So again, if we see this crossover, gold futures could continue to really start upping the pace to the upside. I said by year end, I think it's going to be closer to $1,000 a troy ounce. I still believe that's quite possible. So on to the bonds. Bonds, you know, there's record shorts out here. Bonds, I talked about this one. Getting above that 50-day moving average was key for them. Settled right there pretty much on line with that, but opened there and above today, and the market is cruising higher, up almost a point. They were up a point earlier, but now almost up a point, just up 30 ticks, 2 ticks away from it. Dow Jones Industrial Average just down slightly on the day, about 32 points, holding tight on that 9-day moving average. Again, all of these moving averages are acting as support in the Dow Jones. So the Dow Jones right now holding support on that 9-day moving average and only down about 30 points right now. NASDAQ pushing higher, up 11 points on the day after yesterday's historical high settlement. Today, if we settled here right now, it'd be another historical high. But NASDAQ bunking the trend there against the Dow Jones, up 11 points. I think crude oil is really starting to bring these equities higher as we go along. E-mini S&Ps were in negative territory for the better part of the morning and the day. Just starting to see them get into positive territory, up a point. This is what I was talking about with the E-mini S&Ps overnight. They were pretty decent. Then heading into the morning session, we really saw some downward pressure in there. Most of that had to do a little bit with the API number coming out, seeing those builds, the overall market reacting to that. But as soon as we got those DOE numbers, Department of Energy release on those crude oil builds, bringing the broader market higher, the equities might actually want to even just print these highs in the day session, which seems quite likely at this point. So we could easily see these moving higher until we at least print those in the day session. Onto the trades that I've done. KORS yesterday had a nice comeback. I talked about this in the daily market commentary I had on the February 45.5, 37.5 strangle in there. The 37.5 puts were in the money. I said that I was either going to get that stock put to me. There was several scenarios that could have happened to have that stock put to me. I was going to kind of let it play out a little bit because they did beat earnings, and it didn't really make sense that they were really down more than even the broader market in that point. So the market kind of really trudged higher for the remainder part of the day, was giving me a little breathing room, settled there really close to the 37 strike, just slightly under there. So I figured I only had about 50 cents to have that to play with, to get, to work with. So I decided I was going to let this play out a little bit longer and then decide whether or not I was going to either continue to have that stock put to me if it didn't get up above my 37.5 strike, roll that out in time and buy myself a little duration, add a little bit more credit, and increase my break evens in a sense, or cover it. I decided to go ahead and cover that trade this morning as soon as the market started rallying. We got a nice rally, and as soon as it started pulling back, one bad thing about KORS was that there was trades in nickel increments in a sense. So I let it end up coming back as soon as it was getting pretty close to my 37.5 strike again. I decided to pull the trigger on that, got the ripcord out, and got out of this trade. So in that, I had on those February 37.5, 45.5 strangles, so 37.5 calls, 45.5 strangle. It was a 1 standard deviation strangle at the entry point, and was able to get out of that for 35 cents. So that worked out quite nicely today. So you can probably still get that as we are still above that 37.5 put area, and I would guess that those puts are probably trading somewhere between 25 and 40 cents. The 45.5 calls are probably trading around a nickel. You're not going to be able to get anything less than that because it trades in nickel increments, so you're going to have to give up the edge on that to get out. That's about all I got for you guys today. We have no earnings releases that are really noteworthy. There's a ton of earnings coming out today and tomorrow, but nothing really to write home about for this evening. But tomorrow morning we've got quite a few. We have like Yum Brands, we have Coca-Cola, we have Kellogg, we have Twitter, we have CVS. We actually even had Manchester United for some of you guys out there that like to play soccer or watch the soccer. Didn't even realize that they had a stock, to be quite honest, but they do have a stock. I'm not going to trade it, but the ones that I've really kind of narrowed it down to are probably going to be Kellogg and CVS. They have the highest implied volatility. It's not quite where I like it to be, but we're not seeing volatility quite where I like it to be across the board. So I'm going to be playing probably those two. The rest of the stocks just have too low of implied volatility, and that makes my strangles and my strategies have to come close to where the market is. So I'd rather have a higher implied volatility to allow me to get further away because I get more premium for those. All right, so Friday's webinar is going to be on the broken wing call butterfly. Check that out because it will allow us to limit our risk to zero in one direction or another. I'm going to show you how to set up these this week and next week for the calls and the puts. They're a little bit different setups, and you can limit your risk entirely to one direction or the other. All right, so go to Pro Trader Strategies, sign up for those two, and if you can't take that, take it easy.